It is FOMC day. The results are in. We are not getting an interest rate hike, and we have a little bit more clarity on what higher means and how long longer is going to be. We'll be discussing all of that and more today on Money Never Sleeps. Welcome back, everybody. Happy to be here with you today. As we get going, do us a quick favor. Hit that like button down below. Subscribe to our channel if you have not yet. Nothing that Kevin or I say is financial advice. We are not financial advisors. We're a few guys who love following the markets. But please do your own research for making any buys or sells. It's good to be back, Kev. Mr. House, GM. Missed everybody yesterday. It was weird not doing a show, but it felt like the right thing. We got plenty to talk about today. And it's all around FOMC, what Powell said during his presser, what he didn't say during his presser, reading between some of the lines. Kev, I know that you listened to it. Give me your thoughts first, and I'll kind of go into some of the details and my interpretation of them.
My honest opinion and not my professional opinion, it kind of sucked listening to it because, again, it's Jerome Powell. We all know how it is. I feel like I necessarily didn't like the way that it started off. I feel like Jerome Powell was kind of beating around the bush with a lot of questions. He seems very optimistic despite a lot of the outlook, which is pretty grim. And again, his whole thing, I think the main thing that I took away from it was necessarily how they acted like they did a lot really fast. I honestly still believe that they acted too slow. And if they're anticipating another rate hike, I don't understand why they're waiting to see. It seems like they're, of the two meetings that are left, they're most likely going to have another rate hike. It just seemed really odd to me that with everything getting worse and, again, them acknowledging that things are going the wrong way in some directions, why they wouldn't be more proactive. Once again, they're just being reactive, if not a little too slow to react in this situation. So I personally thought it was no different than any other meeting. But I was a bit disappointed in, I guess, the outcome just for sanity's sake.
Yeah, fair enough. He was definitely, he's, as always, he's very careful with what he says. He tiptoes around a lot of things. He doesn't want to, upset anything. And it really feels like they are just not totally winging it, but I get the feeling that they're not really sure what to expect next. And that is concerning, considering they're the ones who are making the policy decisions. Like, you and I can speculate about it all we want, because nothing that we say or do matters to anything besides us, right? But when they're the ones making the decisions and they're, talking like no hike this time, I believe 12 or 11 of the members of the Fed believe that there's still going to be a hike in the next two meetings. So the end of year dot plot. So for those who don't know, the dot plot is essentially, interest rates on this axis, time frame on the bottom, on the x-axis, time frame on interest rates on the, oh god damn it, x axis. I can't talk right now. But essentially, over time, they're giving you this idea of where they think the interest rates are going to need to be. End of year, they're pointing to 5.6%. That was slightly higher than what was previously expected. The big thing that kind of surprised the markets was by end of 2024, they're still expecting 5.1%, which would mean only 2 rate cuts next year, while many people have been pricing in 4 rate cuts. So expectation being like they may not start cutting until like September of next year. And even by the end of 2025, it's still expected to be like 3.9%. So there is a lot of concern from, looking at it that way. And it's something is going to break. And maybe it's the consumer, maybe it's the banks, it's probably commercial real estate, maybe it's everything. Because let's just be real here. We have a lot of people who are running out of money. And the question was brought up, like, how does your decision-making impact the lower and middle class? And Powell's answer was basically like, we're keeping, inflation is disproportionately impacts those people negatively. completely agree with that. Like, you can't
Yeah.
disagree with that point. But when we look at it, those are also the people who are carrying high amounts of debt. Those are the people who are who are not likely in this current market to be able to buy their own house and rely on shelter. And so when you have the supply of homes being as low as it is due to the high interest rates, shelter continuing to go up, those people disproportionately impacted by their inability to buy a home and find a reasonably priced shelter, holding probably less savings, if no savings at this point, higher credit card balances. Those balances will remain high. The interest rate on those will remain high. So it's like, I've yet to hear a good solution on how this is going to play out and how this soft landing, this flaccid landing, if you will, is going to be a real thing. And so I'm not like, nothing about this game plan really seems all that great to me.
Can I go into something real quick?
Yeah.
I don't think anything that the Fed does. Again, I'm very, very minutely upset that they didn't raise 25 basis points, but also at the same time, I don't think it fucking matters. I think that they're going to end up being forced to cut rates because they are going to break something. There's just too much that is way too concerning right now. I do want to pull up a chart, the one that I was talking to you about before the show. This is bank credit, all commercial banks, and this is the change percentage from year over year. And it's pretty concerning to me. If we can see him, we got to pull it up here. But as we can see, we're over here and it's negative at the time. At the time being, it's negative 0.59%. If we look back to 2009, it's negative 5%, right? That's whenever it goes negative, obviously there's usually a recession. We're negative and we haven't seen a recession yet. And what this is really concerning is banks are tightening up credit, meaning they're not giving loans out as easily. Obviously, it takes a lot more money to pay back on interest because interest rates are so fucking high right now. So consumers aren't necessarily taking out these loans. You brought up, homes and how, the prices are going up. And honestly, that might be a huge issue for home builders too, right? If we start seeing that people aren't able to get loans, then they're going to have to start selling homes for a lot cheaper. But again, they're not giving out loans as easily. So I honestly think that the Fed's going to be forced to have to cut rates because they've broken something. I don't think we get to September 2024. That's just my opinion. I know I'm a little bit more bearish than most people, but this is so alarming to me because now let's put it this way, we're in a place post 2008, post great financial crisis in terms of how tight these banks are, and we still have not seen the crash yet. We have so much. I mean, this could honestly go so negative year over year to a point where it's like, okay, it's almost impossible to get a fucking loan for, I don't know, 12, 18 months after the actual crash happens. So whatever the Fed does here now, I think that it's just kind of, all right, we're just kind of be in autopilot mode till something happens. There's no soft landing coming. I'm sorry. I don't think that the soft landing is ever coming. It's just a matter of whether the Fed decides to keep rates elevated and it's a slow bleed until we absolutely collapse, or the Fed raises something, raises 25 basis points. It's just 25 basis points too much. And, the banking sector or consumer, someone just absolutely caves in because that's where we're heading. Again, no one's talking about tightening credit. This is the most important thing, I think. And this is why we talk about, there's a huge credit event that's coming, whether it's, international debt or if it's just a consumer or it's just the banks. But there is money absolutely disappearing everywhere. And that should be something concerning for the Fed. And I don't think they're doing enough to combat that. I think at this point, it's just kind of, we're all waiting for that morning where everything just kind of falls apart.
Yeah. It was interesting watching the charts and watching the market when the decision came out versus certain points of Powell talking. We're now seeing, we saw a little dip here in the price of crypto, Bitcoin under 27K. We're seeing TradFi take a hit, especially tech. The dollar
Do you see
is
this dollar?
back up. The VIX is back up to the high 14s. So the market is finally responding like, oh shit, maybe this isn't very good.
Dude, look at this dollar. This is on the 1 minute chart, right? So this morning it dropped down to, let's see, 104.66. And then right at 12:01, shoots all the way up to 105.201. That just shows you how much people have confidence in the dollar. That's not a good thing. I mean, right now, if you're trying to be risk on, right? I mean, we got a pause. That just mean I don't know what the market was going to do either way. I guess we were just kind of pricing this in, but that dollar's shooting up. I mean, it's at 105.3. This thing's going to go to 105.6 now. You know what I mean? Everything that was important is out of the way. We got the Fed, pause. We don't have anything really that's super important. I mean, obviously we had some data come out of Canada and England, but this dollar is going to rip now. It's just insane. This was the biggest thing I thought I saw today when everything started dropping.
Yeah, and I want to make this like actionable today because for a while there wasn't much clarity around, they kept saying higher for longer, but we didn't know what higher meant and we didn't know what longer meant. Now we do. We know that the higher level is that 5.6% estimated, so one more rate hike. That longer means we're going to be in the fives through next year into 2025. And so we've been saying this for a while, but I think it's even more clear. Like the number one objective for the next 15 months is to have no outstanding debt that you're gaining, or at least as minimal debt as possible that you're paying interest on, right? Like, so not everyone can pay their student loans off right away. I get it, but not carrying around a credit card balance right now. Like that needs to be, if you have a credit card balance, priority one financially, that accrues interest. Now, if you have one of those like introductory doesn't accrue interest for a year, whatever, blah, blah, blah. But if you have a credit card balance that accrues interest monthly, objective number one financially needs to be getting that shit paid off as soon as possible. I don't care if that means driving for Uber, getting a second job, selling a kidney, whatever you got to do, get that shit paid off, because the more money you're paying in interest, the less you're going to be able to put into accruing assets when the time comes that the market does take a shit, whether it's crypto, TradFi, anything. So I think that is like the most actionable thing that like everyone needs to be doing. And it's tough. I get it. Like it's not easy for everyone to pay off their credit card balances, especially if you've like, kind of dug yourself into a hole. But make some sacrifices, right? Like the thing I keep hearing from Gen Z is like, we don't care about saving for retirement. We're just going to live for the moment. It's like, okay, I get that, but that's irresponsible financially. And there's like times for a give and take there. You can, when the market is good, when interest rates are low and you're not paying, this high amount of debt, it's one thing. But in the current state of the market, with how shitty it is, with how shitty the economy is set up to be, maybe tighten that shit up a little bit. Maybe living in the moment doesn't need to be living in the moment in Ibiza. It can be living in the moment, with your friends at home. Like I don't know, man, but like just maybe make some better decisions here, because it's ugly out there.
Never underestimate just a weekend getaway to a lake nearby. Honestly, that's like the best vacation ever. Just get away from society, just chill. It's not that expensive, right? But yeah, this is I mean, that's honestly the most important thing, and I think that's going to be the most important thing for a lot of people who aren't necessarily invested in the markets. Just lower that debt, right? Lower your liabilities. Don't have liabilities. And the bad thing too now is we were talking about this recently, and we're seeing this even more now. It seems like ever since we did that Canadian mortgage crisis episode, there's more homes that have become debt, right? Their assets have become debt to the point where they can't pay off the principal. Therefore, obviously, they're paying off interest on something they don't own. That's from housing to credit cards to automobiles. Guys, unemployment is going to continue to rise. We see that. Was it Stellantis? Was that the one that they're striking? They just laid off some more people last night. This is going to continue. And we know that as long as these rates stay this high, it can only get worse. I hate to say that, but it just is what it is. So the matter right now, it's preserving capital, lowering your liabilities, hopefully eliminating most of them. And then, yeah, I mean, just don't fall for these traps, because there is a lot of traps out there. And I mean that just from even what Janet Yellen is saying there's going to be a soft landing. Guys, I'm sorry. Hank Paulson said the same exact thing, and the United States was in a fucking recession for 4 months already. So I think that where we are right now is very, we know the direction of the market where they think it's going, but I don't necessarily think that they are going to be able to get us there without some type of headwinds hitting the consumer soon. It's going to get worse before it gets better, in my opinion. And I think a lot of people are realizing that. And we can talk about crypto and stuff like that, where we're seeing actual people, starting to get out of the market and de-risk.
Yeah, for sure. I think just kind of put a bow on what Powell was talking about, why another hike, why higher for longer. We just need to keep looking at the data, right? And the data shows that not only has inflation been persistent, but people's spending habits have been persistent. Like there's still high amounts of consumer spending, and they want to see that come down as well. So it was interesting when they were asking him, like, what are they looking for in the data to indicate that, they can stop raising and that it's time to start cutting, that's where I think that they don't really know. I think they are, from that standpoint, they are kind of just guessing at it. Like, do they have numbers for, PCE, for CPI, for income and spending that they know, like, okay, when it hits, when it's checked all these boxes, now we can start pivoting. And I'm not sure if they do. So I'd say that's just one thing, is like, we'll keep, everyone updated with the latest data that is coming out, how that's impacting things, what that might mean for the Fed. I'm looking at the fund probabilities right now as a result of today's meeting. It's still showing 73% chance of another skip at the November 1st meeting, and the higher probability is they raise again in December.
Guys,
So
what the fuck? I'm sorry. This is getting me upset. I'm going to go off on a little rant. Oil is continuing to go up. You even got JP Morgan talking about oil going above 100. Where did they say? 105, which is what we talked about on the show. It makes no sense for them to be reactive at that point. At that point, everything, we get fucking higher prices, and then we're going to throw on top of that a higher interest rate. So we can't combat the fucking price of oil and all these other things that affect fucking consumers from going up. That's so aggravating that when you hear that there's a 70-some% chance that there's going to be no rate hike in the next one. And again, this is me just thinking like reasonably and rationally. It's like, don't you want to fucking get ahead of this so it doesn't keep going? So we're not seeing CPI prints at 5.2% in fucking 3 months from now. I'm sorry. That just got me upset right there.
all good, man. I get it. And like, at this point, it really is the way that Saudi Arabia and Russia is handling things with OPEC plus. Like, it is economic warfare, basically. Like, they are
Oh, yeah.
doing their best, and they're doing a good job of it. You don't have to like it, but
You can't
it's
understand why they're doing it
causing
too, right?
causing stress on our economy, which they want because they're not our allies. And so it wouldn't shock me if we got a surprise announcement that they were cutting production even more through the end of the year. It wouldn't surprise me in the least bit. And that could be what sends, Brent over 100 and WTI close to 100. Like, it's very possible. I wouldn't put it past them in the least bit. I'm not trying to like rationalize what's going on in those people's heads, but yeah, man, it's these probabilities and what they've baked in, they've shown that they've been wrong. Like, they've shown it to be overly optimistic. We saw it an hour ago with the fact that they were expecting 4 rate cuts next year. Now it's looking like 2. So, they've been just way too optimistic, and it's biting a lot of these, overly bullish people square in the ass, and we haven't even gotten started yet. Like, it's
No,
already like, it's just the tip of the iceberg, man. Like,
if you
these
want,
motherfuckers are going down like Kate and Leo. It's gonna be ugly.
I mean, let's put it this way. This is all I'll say, and then we can go on to some of the charts. But if you guys really want 4 rate cuts next year, careful what you fucking wish for. Because the reason
Yeah,
that you're getting it is not going to be the reason that you want to see. We're talking about fucking imminent collapse somewhere on the scale between the Great Financial Crisis and the Great Depression. Uh, Guys, I'm serious. This is going to be fucking terrible. And everyone that's so optimistic is just not fucking accounting for. I hope you guys have an extra pair of shorts because that's going to be, you're going to need them. This is going to be something pretty brutal. And the only reason I'm saying this is because this is a rollover from 2008, 2019, the fucking pandemic. We've just been kicking this can down the road for so long. There's the bank tightening credit and everything from consumers to fucking unemployment starting to tick up. We tick up in unemployment going into a recession, and then we peak a year after. Just watch out. That's all I'll fucking say. This is it ain't good, bro.
it ain't good, bruv. Let's quickly look at a few of the charts, and then we can wrap it up from there. What is catching your eye? We already looked briefly at the dollar. That is having a strong day. Remains to be seen if that will continue this week, based around what happens with Bank of England tomorrow and Bank of Japan on Friday. If we see another, rate increase from Bank of England, I could see the dollar weakening there against their currency, and then I could also see a similar situation if no one knows what Bank of Japan is going to do. Fucking
They
wild card.
they are a pain in my ass. And again, I don't hate Japan at all. I'm not saying anything bad about the government or what they're doing, but they are just like I'm just like, why are you guys doing you don't want inflation to get worse. Just tighten just a little bit, right? Just a little bit of a short-term pain. No, they're just letting it get away. The yen is just getting its ass, I'm not gonna say ass eaten, but it's getting its ass beat by fucking the US dollar. But I know I didn't mean to say that. I meant to say beaten. But yeah, let's look at Netflix real quick because I've been
Eating
keeping
that
an eye on
ass.
this. Fucking doing a good job at it. But yeah, here we are with Netflix. We shot all the way up to fucking 484. Now we're down roughly about $100 from where we were back in July. But I've been keeping an eye on these gaps because we're filling them. We filled the one down here from 409 to 411. And when we were at 395, I was like, there's a good chance we can fill this one down here at 384. We're very close to it. So I'm pretty confident that's going to be filled fairly soon. Maybe we get a little bit of a bounce off this 200 EMA. But again, this is one of the big ones that is just kind of giving me reassurance that we are starting to see, the down wave, this C wave of this major correction. Again, we're not getting ahead of ourselves. Obviously, the big thing would be if we start closing below the 200 EMA on the daily, and if we look at the weekly real quick, and then we can move on to the next one. Obviously, we got a bit of a golden cross here, but that could be easily reversed if this continues to the downside. And I will say this too, technicals obviously are important, but I think we're at this point in the market where we have to also be reasonable and kind of use the fundamentals to help us assess, okay, how are the charts not predicting what's going on here, right? Because there could be just one day something bad just absolutely happens, right? So say you get an inflation print that's fucking 5.5 or something like that, goes up from 3.7 again. Highly unlikely, but something like that happens. These markets, these charts, all these patterns are going to be invalidated because, human reaction. So, you got to use both of them in conjunction. But for right now, with the technicals, I'm seeing that this fair value gap is going to get filled. Let's take a look at not too much. NASDAQ obviously getting, beaten up a little bit today. It's down about 1.16%. Maybe this is going down for its third wave right here. We'll see. We'll keep an eye on that. It's not going to help that the dollar is strong. Dollar is also going up right now. It's at 105.35. The VIX. Let's talk about the VIX real quick because I've actually been shopping for some options, and one of them that I'm really bullish on is the VIX. And again, that would go in line with a lot of the volatility of expecting some of these indices to start seeing some red. Again, it's just there's a lot going on right now that we can kind of see why some of these indices would start to sell off a bit. And once we get under some of these levels, you might start seeing just the bots and a lot of these other machines start selling some of these stocks just to preserve any loss. But the VIX is at an extremely low level right here. We see that there's a lot of support. Do we go down lower? Sure. Maybe we can go down to 8.8. I don't necessarily see that happening, but I do think that we're going to start seeing some type of volatility where we start breaking. Maybe I'm going to get rid of this. We don't even need that anymore. That's invalidated. But I do think that we are going to start seeing some quick spikes up. And, maybe we go into the 20s. It's very possible. I mean, we've kind of creeped up to almost 15%. We're up 4.54% today. It's very possible that the VIX starts to see, some quick candles and rejections down. But once it starts getting, picking up, I do think that the VIX is going to start picking up pretty rapidly. I mean, just look at COVID, it shot up out of nowhere. I mean, there's a huge gap from one day to the next, right? We're just kind of consolidating, and then it just shot straight up all the way to about 85. Is it possible that we can go to 85? Sure. Is it possible we can go higher? Absolutely. Again, I do think that we are heading towards something that is worse than 2008 just because of how much money and how much credit and debt is involved in this situation, right? And this is globally. And we're starting to also see something that we didn't see in 2008 is there's a lot of, foreign affairs that are absolutely escalating. So there's a lot of things going on right now. I think this VIX is going to be something that is going to be moving, when it does move, it's going to be absolutely rapid. And I'm keeping an eye on some of these options because I do want to get some exposure to the VIX.
Fun fact, I'm looking the price of or the rate on a 2-year treasury right now is the highest it has been since July of 06. So these, the bond traders who tend to be a fairly level-headed, rational, albeit boring people, they believe that your return over the next 2 years on one of these bonds is going to be one of your safer bets out there. That's a crazy, 06, man. It's been 17 years since a 2-year has been at this rate. That's fucking nuts. That's not a good sign, by the way. Just going to toss that out there. So I was seeing, and it wasn't like some scam, just quick wick up and down. Like that is where the rate is hanging out at the moment. Like it's no bueno, dude.
I completely agree, dude. You know, it was a really big indicator to me last night. Obviously, I've been telling people I've been shopping for options. I'm not exposed to crypto other than my main short, which you all know what it is. But I've been trying to get into some options because I see, low risk but high reward in a lot of areas. A lot of those options that I was buying are starting to go away. They're starting to be worth more in value. So that's telling me that a lot of people are picking up on some of these higher volatility, bets that the market's going to go in one way or the other in the next 6 to 8 months based on whatever the expiration date is. So I think that people are starting to hedge against potential downturn. And again, there's a lot of indicators that are probably leading investors into buying some of these, and I can't blame them. But it's a really interesting dynamic seeing how different the options market is from, I don't know, maybe 2 weeks ago to where it is today. So I'm really interested to see how that plays out. And again, I kind of have to get in a little bit sooner now because I don't want them to have diminished return if we happen to be right in the next 6 to 8 months. Something does happen. But let's talk about crypto right now because crypto's had some wild shit going on. Two main things you need to know about crypto is obviously I do think that we are probably going to see one more squeeze up. It's not that I want to see a squeeze up. It's just that we see things on chain that are not necessarily the greatest. And when, these are recurring things that we see. Today I saw $260 million worth of TUSD fucking minted. Again, that the market tends to pump whenever we see that much money of true USD minted. We all know who it was because it was on the fucking Tron blockchain. Guesses, you all know who it was. It was one of the two boys that we don't like on this channel. But yeah, it tends to pump. And then again, I think that is just offering a lot of people to get out of the market at a higher level. You can see that we didn't get the death cross yet. And again, I still don't believe we're going to get the death cross today or tomorrow. We're closing below it, which is a good sign. Obviously we want to close below the 200 EMA. We can see that on the daily. We're stochastic RSI. We are 198. I mean, that's fairly fucking overbought. But I think that it is possible that we do push up to that 2,800 level. 28,000 level. I think that would also be a lower high because we got 28,132 or something like that right over here. But then that would just trap a lot of people. It would liquidate a lot of shorts who shorted when we broke under 25.2, and it would liquidate all those positions, and then we'd have a lot of people on the downside who were longing at these levels because we broke the death cross. It's not going to happen, and then you can just wipe them out on the downside. Again, I think right now when we're seeing these markets and these markets move, it's not retail. Retail's in this space, but they're not the ones who are making this market move. This is 100% exchanges just moving money from cold storage to the hot wallets on the exchanges. Obviously, they're just liquidating people in both directions. That's why we haven't had a clear cut move just yet. But the money is dwindling. Some of the biggest exchanges are seeing depleting volumes. I just saw that Binance US has some of the lowest volumes in the past 2 months in its history of its entire exchange. So there's a lot of things that we're seeing. Bitcoin, I do still believe, is kind of going to trap a lot of people here thinking it's going to go long, but we still haven't finished that wave 5. I think we are going to get the death cross maybe next week. I mean, I would anticipate that it'd be by next week. And again, I'm being very conservative here, but we got to break this 25.28 level on the way down, and we have to break it significantly to the point where we start closing below it. And then we'd probably aim for this 23,629 to maybe even like 22,000 flat. The reason I'm saying this is because the higher this wave 4 goes, the lower this wave 5 will go. And again, it's not completely done over. We'd still have a 3-wave move within this wave 2. Not to get too complex, but I still think that there's a lot of.
That doesn't sound like you making things too complex. No.
This market is very eager and very overbought. It's very dangerous right now. I don't like it. But again, I'm anticipating that the market's going to pump because I don't want it to, and also because there's true USD that it keeps being minted. And so I'd rather be on the side of caution right now because I don't want anyone to get caught out. And I also understand that manipulation is fucking rampant right now, especially with the SEC going after Binance. And, it's back and forth. People are absolutely just, reporting false information. Guys, all the information, all those court filings are public, so you can't see them. So if you find something on Twitter, just don't retweet it. Fucking actually look into it because there's a lot of people out there that really want Binance to succeed. But guys, this is it doesn't matter if they succeed or not. It matters whether this market's gonna. I mean, they're absolutely fraudulent in my opinion. Allegedly some of the accusations are there, but it's going to impact the market and it's going to impact the future of the space. I don't think the SEC wants them in the running when these BTC ETFs are coming out. But when I'm looking at everything else, it's red. I think that we're seeing ETH absolutely bleed to Bitcoin. That's why we're seeing it down. It's down 25.7 today. We're below that 1619 level. So we closed below there. That's not a good sign for ETH, which means that for all their altcoins, there's a good chance that it's going to continue to go down. But watch Bitcoin in comparison to a lot of these other altcoins, because if we do see dominance start to rise, if Bitcoin rises, it's likely that these alts are going to be capped at a certain level of them pumping. So nothing too crazy with crypto. That's all I got for us today. Obviously watch the charts, be wary that we could pump to that 28,000 level. But I think a lot of people, we're seeing a lot of crypto go onto exchanges. You don't put them onto the exchanges unless you're going to sell. But yeah, we're talking about a lot of ETH and a lot of Bitcoin. So I'd anticipate that those two are the big movers going into the weekly close this Sunday.
All right. That is how we're going to wrap it up for today. We'll be back tomorrow at our usual time. We'll be discussing the latest from over in England with their rate decision, kind of seeing what is going on with Japan as well, how the markets are reacting overall. Another day of contemplating what Powell had to say. Appreciate everybody for being here. If you have not yet, like, subscribe, comment, share us out on social. All of that good stuff is greatly appreciated. Hope you all have a great day. Markets are closed now. It was an ugly close. NASDAQ, I'm just looking at, I know we're getting ready to say goodbye, but NASDAQ down 220 points on the day. Closed in the red in a big way and had some momentum to the downside. So interested to see how it opens tomorrow morning. But appreciate everybody for being here. Have a great day. Stay safe out there, and we'll see you next time.
Take care, everyone.